You see, I don't know what people who are buying Palantir at today's price are thinking. Honestly, what numbers are they counting on? Do most Palantir investors actually think about valuation at all? Because even though Palantir is indeed a great company, with great margins, a sticky product that has been growing, its stock is trading at such extreme levels, there's so much optimism priced in that it seems most people will probably end up losing money investing in it. And in this video, I'm gonna show you what I mean. Before we begin though, in case you don't know me, my name is Victor and I run Capital Edge Research. If you want to really understand the stocks you hold, check it out. But you see, a funny thing about Palantir is that most people buying the stock today think it couldn't be a safer bet. However, as I will show you, Palantir could actually be a terrible investment. Now, why am I saying that? Because you see, investing is not exactly about buying excellent companies, but rather about buying undervalued ones. Palantir is like a Lambo, a wonderful car, but it's not because a Lambo is a hell of a car that you will pay any price for it. A Lambo might be worth 1 million, 2 million, even 5 million. However, I think that everyone will agree that paying 50 million for a Lambo is a little too much, right? But that's exactly how Palantir is being priced right now. I mean, look at that. Today, Palantir's market cap stands at about 320 billion. 320 billion. On the other hand, look at the revenues this company is delivering, at around 3.1 billion. That means the stock is trading at more than 100 times revenue. Now, I didn't say 100 times net profit. I said 100 times revenue. Now, Palantir might be the best company in the world, but even so, at least in my opinion, buying the stock at such high valuation levels is extremely risky. Because you see, it only takes the market to change its mind a little for Palantir stock to crash violently. As you're about to see, there's so much optimism being priced in Palantir that if this company doesn't deliver wonderful results, its stock could go down like 40%, 50%, or even more. Now, let me show you what I mean. So let's run a quick valuation here using the price to sales multiple, okay? Now, as we see here, since 2020, Palantir has been growing at about 24% per year on average. Now, let's say Palantir grows at 25% per year on average for the next decade. That's a quite optimistic assumption, but that could indeed happen. Now, about our projected multiple, let's say that in 10 years, let's say that in 2035, Palantir will be trading at 20 times revenue, okay? That's a high multiple, but many companies trade at that level. For instance, as we see here, Nvidia trades at 30 times revenue, while Cloudflare trades at 37 times revenue. So sure, of course Palantir could be trading at 20 times revenue in 2035. That could indeed happen, right? However, I just prefer not to count on that. I rather invest in companies where I can make money, even if things don't go that well. But anyway, as we see here, in this case, based on these premises, Palantir's future fair price in a decade should be around $245. So we would be talking about a total return of 82%. Not bad, right? Well, actually, a return of 82% in a decade is far from being excellent, since that represents only about 6% per year, as we can see here. I mean, treasuries are paying around 4%. So by investing in Palantir based on these assumptions, you would be taking on a lot of risk, since you would be counting on quite optimistic numbers, right? For a pretty average return. To me, that certainly doesn't sound like a great deal. Now, what if the numbers end up being lower than what we assumed here? So for instance, let's say Palantir grows at 15% per year on average for the next decade, right? Instead of 25%. Now, 15% might sound like a small number, but in reality, if that actually happened, Palantir would hit around 12.6 billion in revenue by 2035. So let's assume Palantir grows at that rate, okay? And let's also project that by 2035, this stock will be trading at 15 times revenue, which is still a high multiple. Now, in that case, Palantir's fair price by then would be around $80, which would represent a total downside of 40%. On the other hand, if Palantir ends up trading at, let's say, 12 times revenue, well then we could face a 52% downside, as we see here. So that's what I mean when I say that the people who are buying Palantir at today's price will likely lose money, because even if this company delivers good results and continues to trade at high multiples, chances are that this stock will still go down, because there's already too much optimism priced in. You see, for this stock to go up and really make sense as a good investment, we need to count on really extreme assumptions. And here many people might say, yeah, but Palantir will probably grow at an average rate much closer to something like, for example, 35% per year, right? And since this is a very unique company, it could easily be trading at 30 times revenue in a decade. Now, according to these assumptions, this stock could be indeed a good investment, right? After all, based on these premises, we would have here a 500% return. However, look at the numbers we need to count on. Now, if you're looking for this kind of return without having to rely on extreme optimism, I suggest you check out Capital Edge Research. And since I still only have 2 investment ideas there, I'm leaving you a 40% discount coupon down below. These 2 investment ideas, though, are great deals. One of them is a pharmaceutical company that's being completely ignored by the market, which is basically being given away for free with an enterprise value close to 0. The other idea, though, is more risky. However, if this other company delivers, we would be talking about a total return of more than 10x. But anyway, going back to Palantir. So that's why I'm not buying the stock. Even though I do recognize it is indeed a great company. But I'm avoiding Palantir because to make money on the stock, I would have to rely on some really extreme assumptions, on some really optimistic premises. And that's just not my style. As I said, I actually prefer the opposite. That is, to invest where I can make money, even if things don't go well. Now, in case you're buying Palantir, let me know down in the comments on which numbers you are relying on. That would be nice. Anyway, that's it for today, and see you next time.